It played twice, but it seems like everything is fine now. So you see, the lucky first attempts. So we will divide the conference into presentation on my side, about 20 minutes, and then we leave about 10 minutes for question and answers. If you have questions already that you put into the chat, as you could hear, my team is on the call as well, so they will moderate the questions. And they either send me on a WhatsApp, which I have with me as well, or I will read the questions if there are not too many, but we'll try to address all of them. You see, many of you know me from eToro. Some of you may not know me from eToro, so you can have the access to YouTube, Instagram, and LinkedIn. They're also at the last slide, so you are then able to follow that. Also, this presentation will be live, uploaded onto the YouTube, so hopefully we can edit the beginning. So let's start with my background. So I graduated in 2009, which you may or may not know. It was the time during a huge crisis. So we had subprime mortgages in 2008. So 2008 was very, very bad year, and 2009 was not much better. So when I actually finished university in the UK, I graduated with top of class, double first class honors. It was in plain recession, so most of the financial firms were not even hiring anyone. But thankfully to my double first class and few languages to the boot, I found a job at Reuters. I know there are some people from Reuters here, so welcome. Reuters was taken over by Thomson, so it was Thomson Reuters in 2008. And I joined as a fund analyst, actually, at the Benelux desk. So I was analyzing the whole portfolio of funds, mutual funds, hedge funds, special identity vehicles. So all portfolio funds, about 2,000 at the beginning. As an analyst, I received a free-level promotion in the first year at Reuters, became the youngest team lead at the age of 23, I believe. And so I had 12 direct reports. Then I moved to Paris to lead the wealth management efforts, and I spent 3 years in Paris and Luxembourg managing about 300 clients, about 100 million in revenue. So my role was basically to help chief economists, central bankers, portfolio managers to optimize their portfolio and optimize the tools they're using to manage that portfolio. So that obviously put me in a very interesting position to know a little bit from the inside how an asset management firm is structured, but also what's important for them to actually make the investment decision. So that was fabulous. I spent 3 years, traveling and training clients and taking them for dinners and so on. So that was absolutely wonderful in terms of my knowledge about how financial services work. Then I was poached to a technology firm. You may know that around 2014 was the time of digital transformation. Financial services firm were not growing so fast, so I actually became a global head of marketing for a tech firm. About 70% of their division of their revenue was financial services, so I was leading that part. So I did that for about 2 years. In the meantime, I attended a disruptive strategy program with Professor Clayton Christensen at Harvard. So learned a little bit more about disruptive strategy and innovation and how companies disrupt the markets. And since 2016, I have been independent. So I've been mainly doing investment management consulting and CEO advisory lately, only working with CEOs at the moment. So since 2020 on eToro, so actually what you see here is 11 years of one massive slump to another massive slump. So in 2008, 2009, we had subprime mortgages, and in 2020, we had COVID-19. So I'm old enough to have been through at least these two crises. I was 13 when the dot-com bubble came in 2000, but it's very important that I've seen what happens during the downturn, because if you invest only during the market upturn, it's quite easy, but it's very important to be able to have the character and experience to manage the downturn as well. A little bit more about investment philosophy. We'll not focus on here that much. It's quite complicated actually, but simplistically put, I'm a value investor. So if you divide investors into two categories, you would have value investors like Warren Buffett, who says, I buy the companies that I like at the good level and they grow over the period of time. Whereas growth stocks, it's much more like Tesla, you know, companies that grow, and you buy more of a dream and the vision of the company rather than the fundamentals. So I really focus on the fundamentals. The F score is basically improved value investing. So it focuses on fundamental values such as profitability, operating margin, gross margin, revenue growth, debt, and so this is all related to fundamentals. So I have quite powerful tools and 17 years experience to value a company. And then I actually use on top of it a Black-Litterman model, which is an improved model portfolio theory. So model portfolio theory talks a little bit more about diversification, about having 20 to 50 assets, which I always have. I'm at 47 at the moment. But Black-Litterman also, there were Goldman Sachs employees in the 90s. In 92, they published their model. And it talks a little bit more about the investors' focus on the future returns. So there's a little bit more intervention in terms of what's going to happen in the future, not just in the past. But if I were you, I would probably not focus on Googling it too much. You will see a little bit more of my portfolio, so you understand some of the decisions. It is a long-short strategy, so I actually buy undervalued stocks. It's probably about 80% of the portfolio, but I also short sell. So for those of you who are not familiar, it's basically saying that the company price will go down. So I've actually shorted Aston Martin at the beginning from 280 to 80, which is quite an interesting thing because I've been very, very long and positive about Aston Martin. But it's just to illustrate to the point that I think if something is very expensive, I will actually sell it. So here I talk about 50% downside potential versus 20% upside left. Okay, so let's look at 2020. So I joined in March. I managed to be green 001, but I actually started with almost 25% drop on Porsche, which I will show you in the next graph. So that was a brutal month of COVID. Then obviously we were through the COVID. So you see gains of about 5% every second month. The other one was quite flat. The only really bad month I had was September. This is when Corbus Pharmaceutical went down. So that was a really bad month, took us quite badly down. You also see the evolution of your portfolio. October was an incredibly difficult month for everyone, so we were slightly down. But you see November, we generated 26.25%. This is where the cyclicals went massively up. So our FTSE, so the exposure to the UK, and our cyclical value stocks went massively up. So a lot of actually clients were joining at that time. So that was fantastic. So 39.91% return in 10 months, which is about 4% a month. So we've beaten practically every single institutional investor. I actually don't know anyone who made more from the institutional. So that was a very good year. But as you see, there are bad months sometimes, like in September. In terms of 2021, we started incredibly strongly. We have some TRXC and BNGO, which I will talk about later, that generated over 1,500%. So we are actually, today we are up again. We are about 37% on the year. So we are almost at the level that we had in 2020. You see 20.34 in January. We were even at 24% up, and there was a massive downturn at the end of the month, but we actually protected the portfolio. So a lot of popular investors are close to zero. We are actually at 20.34%, which is a lot. And this month we are already about 13.5%, 14%. So we continue the growth. What's important here to emphasize is that we also reduce the risk. So you see at the bottom of the slide, you see this yellow and one orange bar, and then they turn green. So actually not only we increased the revenue here, the profit, but also drastically managed risk. So that's very, very important for me, because as you can see, we have, well, this is the slide from the weekend. We have now 1,360 copiers and 3 million of asset under management. So this is very serious. I have quite a substantial amount that I manage on my own, which is very important for you to understand. So I basically manage my own portfolio, and copiers, they copy, which then allows them to automatically replicate the portfolio, which is a fantastic system that eToro allows us to use. I am at the moment the elite, which used to be the highest tier. Just this year they put Elite Pro, which will be a black star. So that starts with 10 million. So that's my next goal. But I'm the highest level of previously at the elite, which is a green star. So it's very, very important because eToro very carefully selects their popular investors, and then you go through 4 levels of popular investors. So that used to be the last one. Now the last one is a black star. But we are also very important regulated by financial authorities in terms of the positions we can take, in terms of leverage, in terms of risk. So it's also very, very important to have a low level of risk. And you can see that with these returns, not surprisingly, we're attracting a lot of copiers. Some of the popular investors have over 20,000 copiers. So I actually hope to see 20,000 here to compete with the most popular, which we outperform largely. They are about 10% on the year. We are at 37. So it's something that I hope will attract more and more copiers. Now you can see the 10,000 investment simulation. It's already at 18, but this is actually a very interesting graph because it shows the evolution of a copier who joined me in March, was the first opportunity, and invested 10,000. So you actually see that at the beginning we went to below 7,500. So I actually invested in Porsche, which is a very safe stock, German stock, and a Frankfurt Stock Exchange, but we lost 25%. You saw here that we generated 001. So we were actually, here you see, we're just around 0 at the beginning of April, but we started massively down. So if you actually take it from here, you would have from 7.3 thousand, you would go to 17. So you would more than double. But even if you take the downturn, we are at 18,000 now. So it's actually 80% return. So if you put 10,000, you would have 18. Obviously, if you put 5, you would have 9. And I think you get the drills. It's all proportional, and you can see that from November, so we had bad month in September, neutral in October, but if you joined here, and I have some people even from my high school joining around here, you would be about 80% up since November. So that's a massive growth, and we actually continue that, as you have seen, in January and February. Now, in terms of portfolio diversification, I will not focus on it that long because I could speak about it probably for 12 hours without taking a break. Just to say, it's a very diversified portfolio. We just had a professor speaking about diversification. He was invited by eToro, and he talked about that if you have maybe Apple and Tesla, if you put 50-50, it will be a much better portfolio. It's true because you can increase the return without increasing the risk. So if you spread the portfolio, we have now 47 instruments in the portfolio. So actually sometimes, Chinese stocks go up when American go down. Sometimes technology goes up when the value go down, and so on and so forth. So I took a lot of time, probably takes me about 18 months to select stocks, and then I put them in the portfolio in the right proportion, and that creates a very, very diversified portfolio, which reduces risk tremendously. So I want to emphasize that, because at 3 million, I want to preserve the capital. I want to make sure you guys don't lose the money that actually grows steadily with the company. So let's talk about 3 big winners quickly. So Porsche, I already mentioned. This is something that attracted me to eToro because I wanted to trade Porsche at 55, and it was about 70, so 60, 65, and I thought it's worth 70, so I was interested to enter at 55. And when we started having the Corona crisis, I saw it at below 55, actually at 50, and then I looked at the broker that's the cheapest, and I found eToro this way. It's actually the cheapest broker. There's no commission, no fee. And so I could buy Porsche in Frankfurt for no commission, whereas my other brokers would charge me an enormous commission to trade on a foreign market. And since then, actually, you saw it going down. So it went from 50 to even below 30, which was a terrible feeling for me. But I kept buying. The lowest I bought was 28.99, and we are trading at 60 now. So it's over 100% return. So that's actually close to what Portfolio did. Portfolio did even better, but very, very happy with the stock. And it's similar to my original strategy, save stocks that steadily grow. I became a little bit famous this year on Aston Martin because I published my analysis on Instagram, on my website, and I spoke to some very, very wealthy people in the art world and other disciplines. And I was talking to them when Aston Martin was worth 600 million and the brand value was worth 4 billion. So I was literally telling everyone that if they burn the cars and just start selling t-shirts, they are still worth 4 billion. Most people said, oh, if you're such a smart ass, why don't everyone do it? And then we created almost a huge community around Aston Martin. And I know a lot of people who joined the call that were also copying me, but also invested a little bit more on the side on Aston. I have 5 times leverage on my private account. So that's about 800% return on that investment. So I'm very, very happy. And hopefully you see an Instagram picture with an Aston Martin. So I plan to, if things go well, I plan to buy maybe a old Vantage or DB9. They're a good value right now. And since December, I wrote about TRXC before we were able to trade it. So it's Transenterix. It's a robotic company in the United States, allowing surgeon to operate on the stomach without human intervention. So it's a robot actually cutting your stomach, which is very hygienic and it's more efficient than a human intervention. And we are over 1,500% return, so 15 times more, which has been a phenomenal stock, and it allowed my copiers to really do very, very well. And actually, a lot of people actually started copying me as well because my analysis was pinned to eToro, and so we became a little bit famous because of that. Also dropped the name at some golf courses, and many people are very happy. I will speed up a little bit because I know we are already almost 20 minutes. We started a little bit later because of technical glitch. This is important because it's a official fact sheet. So now eToro generates me the official documents, as this is something that I spent a lot of time doing when I was younger. At the beginning of my career, I was actually responsible for those fact sheets for investment funds. What's important here, 2034, you know this already because I've showed you the performance. You can see here. What's very important, well, I'm based in Luxembourg, most of you know that. You can see the graph versus the main American index. So you see, until November, we were more or less equal. Sometimes I overperformed. In September, I had this bad investment in Corbus. But since November, we really took off from like 1.15 to 1.7. And S&P is only at 1.25 maybe. So you see the market didn't really go that much up. I mean, it did, but steadily. But we just catapulted from November. So that's fantastic news. You can see this is generated at the end of January. So we have almost doubled the amount of copiers. We have 1.5 amount of copiers, and the same with assets under management. Here what's very important is this annualized return, which is a very interesting metric because it actually shows you what you would do on an annualized return. So, we started March. Actually, from March to March, we'll have over 100%. But if you even take the drop we had in March, you would see that on annualized return, it's about 80%. We have 82% winning months. So actually were 2 bad months, September and October, and all the rest are we call it in the green, which is very, very important. And as I said, my objective is to provide a risk-adjusted return. So I want you to grow your wealth, and I want to do it in a steady fashion. So, I mean, we had a phenomenal growth, but for me, it's most important to actually risk manage it and make sure that you don't lose the money. Before we wrap up, very nice. So my team put this together. I really outperform almost everyone I know last year, and this year it's going to be even better. So on 12-month rolling basis, I have the best return that I know of, over 100%. 39.91% return in 2020 is double that of the most famous and the richest person in the world, Warren Buffett. He's called the value investor, the most famous one. Someone that I'm really impressed by is called Ray Dalio. He's managing the biggest hedge fund in the world. He wrote a book called Principles, which I strongly recommend to everyone, not only interested in investments. It's actually a lot about life. And if you look at the main indices, so Standard & Poor, S&P generated 16%, Dow Jones not even 10%, FTSE, which we actually had a lot of investment in the UK, was 15% down, and Japanese index was 20% up. And the hedge fund industry as a whole, which I would compare myself to, is 12%. So 12 versus 40. So you can see actually with the most famous investment managers in the world, you would make about 12. With me, you would make about 40, and we are about 37 this year. So that's just to put this into perspective. And to finish off, so I'm actually perfectly 20 minutes with a 2-minute late start. The goals for 2021 and beyond, the short term is to reach 2,000 copiers, and then we will make an official big conference with me with eToro. So at the moment we are at 1,360 or so. So I hope to see many new faces coming soon. We are at 37%, but the goal is to make at least 50. So I'm now investing a lot of stocks that I believe in until the end of the year. And also I've just added that myself, 10 million asset under management. So I want to become a black star. My ultimate goal is to have 30 million of asset under management, at which point I can focus just on eToro. But 10 million is a kind of intermediate goal for us to reach. Very, very important. So we actually start having bigger and bigger investors, so the asset under management grows nicely. And long term, so you saw 40% return in 2020. You're seeing about 36, 37 in 2021. But my long-term goal is about 23%. And I would say, especially if you invest on a 3-year horizon, the best educated hedge funds usually make about 20, and that's considered the maximum return. So if someone tells you I will generate 100% a year, I think that's unrealistic and it's probably a scam. So for me, at 20%, I'm happy. So if we every year if we generate about 20, I put it 23. It's my favorite number. Let's be more optimistic here. That would be a wonderful return. Versus a bank probably doesn't give you even the 1%. So let's open for Q&A. You see here my YouTube channel, my Instagram, my LinkedIn. You see my email, my phone, and my website. So actually my team updated the website just before the call. There's a new section called Investment Management. So yeah, I encourage you to subscribe. I write the blog post there and so on. So actually we have many questions. I will take them one by one now. And my team has sent them from the chat. So let's see. Question number 1. You mentioned you're bullish on Heat, American Airlines, and a few others such as Kier. How do you identify these companies, and what metrics would you suggest for beginners? So that's from Sami LR King. Thank you so much for the question. If you take American Airlines and Kier, especially Kier is a very, very undervalued company. So I always look, if you want to, suggestion for the beginners, it's very important for you to understand the concept of market capitalization. So basically the price multiplied by the number of shares, we call them shares outstanding, will bring you to a market capitalization. So if you will, it's like a value of the company on the stock market. Okay, and that's very important. And many beginners make this mistake that they think if someone costs $1, it's cheap, and if it costs $10, it's expensive. Not necessarily. What's important is how much the company is valued on the stock market. So if you look at Kier, it's only at about 120 million, but they won a 200 million pound contract recently. So that should give you some perspective. If they're winning a contract that's bigger than the whole company, and you can look at the graph, they're very undervalued. American Airlines also very undervalued, and I can tell you that their brand value is worth 8 billion and their market capitalization is only at 10 billion. So again, this is something that shows me it's very, very undervalued, and I think American Airlines will benefit from the post-COVID. So when we get back to more normality, American Airlines used to trade at 60 and now it's at 17. So we could go 3-4 times up since these levels. Heat is a bit of a different story. They had amazing results on their lung cancer drug that's in phase 2. So it's moving to phase 3, which is the finals phase. So it's a very, very interesting stock. It's much more risky, but very interesting. Another question from Paul. I know Paul from he's following me on several social media. I don't think we'll have the time to answer all the questions, but I will put these answers also on eToro, and then let's continue the conversation here on YouTube, so we can post those questions and answer to those questions. I will work with my team to actually put it together. So the second question is, when is the best time to add the copy? Okay, and then reinvested the copy. From Paul. I think the best result you would get if you invest every month. So let's say if you maybe decide to put a portion of your salary into investments and you copy me, this will give you the best result because it will benefit you from what's called dollar cost average and also what's called compound interest. So if you look at the results here, you see 20 plus 12 is 32, right? But you see 36 total, because that means basically, in January we're already 20% more, and in February we generated 13% on this 120. So that's a very beautiful thing called compound interest. If you go to my YouTube channel, you will see a video on it. And that's basically how people become wealthy. Because once you have 100 and you generate 20%, so if you had 100 here, you would start 2021 with 140. Okay? So 20% from 140 is 28 and not 20. You see? So you have 8% more. So that's very, very important. So I encourage you to invest every month or every quarter, and this will bring you the best dollar cost average and the best compound interest. Third question from Marek. Impact of financial markets on the vaccination of COVID. Any predictions for next couple of months? Well, I think, Marek, we've seen the growth of the growth stocks of the Teslas and Apples of this world. They've been very, very high. I think with the vaccination, we will see growth in maybe American Airlines and maybe some cruises. I'm quite skeptical about the cruises, but companies like this who are more cyclical, maybe also companies in China that are very cheap. I think those travel and leisure companies will benefit quite strongly, and everything that's very undervalued and because of COVID, I think these companies will benefit the most. Then we have some questions about penny stocks and cannabis stocks from Simon and Manoj as well. Well, you need to, I'm not an expert on medical marijuana. I've been posting a graph that showed strong growth of 3 times over 7 years. I posted that last year. And I bought a HMMJ, which is a Canadian ETF, exchange traded fund. And we went from 6 to about 18. Now we're about 15. So this was my investment. I did not buy any Aurora cannabis or anything else. I decided to invest in the ETF because it aggregates all of those stocks. And I think it's an interesting industry. And I don't pretend to be an expert in it. I don't smoke, I don't use those products. And so it's very difficult for me to say one company is better than the next. But we did invest in the ETFs and made 200% on it. So that's very important. People ask me about QD, Quadian, if I pronounce it, or Quadian. I don't know how to pronounce it. It's a massive discount. So George asked that. Well, I plug it into my system and into my graphs and analysis, and it doesn't show me to be a better value than the others. So then I end my analysis. I have at least 30-40 instruments that I'm quite interested in, and QD does not enter this one, so I'm not interested in that. Question on Bionano. I have reduced it slightly today. It's been growing up massively, so I sold a little bit at 15.20. I think we are at 14.50. It still has room for growth, probably till about 17, but I'm not overexposing our portfolio. I prefer to come back to undervalued. So you see, this strategy is very specific, and then I like to take profit from the companies that have worked and reinvest it in the companies that I feel they are still undervalued. So I think that's an important one. I try to take so to cap questions at 10. I will take 3 more questions and then we'll wrap up. And as I said, I encourage you to follow me on social media, to ask questions on YouTube, ask questions on eToro, and so we will continue the conversation. So Kishen thanked me for the presentation and asked 3 questions. So the airlines I already mentioned. If we get the vaccinations, I think companies like American Airlines will grow. Myota. I'm not an expert on cryptocurrencies, so I will not even enter there. We have made 350% on a very small position in Myota or IOTA, so we keep it, but we will not pretend to be experts. There are other traders who trade those instruments. And about the GameStop, it's a very long question. I don't like market manipulation. I've been in the industry for 17 years. And I don't like any of this pump and dump, and I think it's quite immoral, and I don't engage in any of this. For me, it's a profession. I treat it very seriously, and I will never engage in any pump and dump schemes and Reddit things. It's not of interest for me at all. 9th question is again around cryptocurrencies. Again, I invested with my family a long time ago. Some minor amount of money, and it went up, but I'm not actively investing in the cryptocurrencies. I'm actually quite bearish, so if I decide I want to short Bitcoin again, I may do it, but I'll probably not go long on Bitcoin, and I'll probably not buy any other cryptocurrencies. So the last question from Christopher. How important are social and environmental ethics to investments to you? Very good question. Fantastic. So we wrap up with this one. They are important to me. So I actually have a metric in my very advanced tools where I plugged all companies. I have environmental, social, and governance metrics. So actually, I look at each company and how strong they are. I look at management and their background. I bought Peloton for diversity reasons. Their marketing management, and they're black. They've been very active in Black Lives Matters. I think diversity brings results. So I like women on board. So I invest in Citigroup with a female CEO. As I said, I invest in Peloton. I just bought what I believe the most sustainable company in the world, Ørsted. I just bought it today before the market closed in Stockholm, or Denmark rather. They are quoted in one of the two. I can't remember which one, but in Scandinavia, and they have amazing ESG ratios. And actually, I would like to invest more. With Biden as the president, we had a little bit of a run on those companies. So I want them to be fairly valued, and I think Ørsted is beginning to be very, very interesting. So I'm actually potentially interested in increasing, and I know some people in management there, and they are very, very good people. And so I'm very, very. I always look at those metrics. I will always choose a company with a good ESG score over similar one without a good one. So it's important. And okay, I have the last question, and we wrap up. So, what's the strategy for a massive drawdown like last March? We are having what we call hedges. So we have TZA, which is basically an inverted Russell 2000 index 3 times. So it's actually hedges small companies going down, which I think will have some bankruptcies potentially. So we have that. We are very, very diversified portfolio. And we also have VIX, which is a volatility index. And that also will grow as the markets will go down, if they go down. So if the markets start going down, we will amortize the blow to the portfolio. So I imagine if other investors lose 10%, we'll probably lose about 3% because we are 3 times leverage on the hedges. And then as the hedges grow and I decide that it's low enough, we will then sold the hedges, and we actually have 25% cash. So we actually are prepared for the downturn. So if stocks go down, we will be very carefully picking up the stocks that are very low, and this will allow us to grow even further. So we are already preparing for it. I'm very, very careful. I think actually markets should be experience some healthy correction, so we are ready for that. So guys, massive thanks for all of you joining. I'm so excited to see so many of you. We have the first training of 2 minutes of kind of Streamlab and YouTube going concurrently, so apologies for that, but I'm so happy that so many of you joined. Excellent questions. I will now work with the team to maybe create a post out of the questions and maybe put it on both on YouTube and in eToro. So stay tuned, subscribe to YouTube. We'll make more of those. We'll also maybe make another one that will be 1 hour, so you'll be able to ask questions live as well. So this was the first one. So once again, many thanks, and I speak to you soon.